Hi, this is Zach here from Zach's Traders Cafe with a look at some major markets on Tuesday, the 27th of September, and some changes afoot here for leading indices. The FTSE illustrates that with this third high, the bull trap through the red resistance line from August, right, normally at 68.50. Probably waiting to see now whether we have an end of day close back below the blue 50-day moving average at 67.93 as an early sell signal, but not looking that healthy after what is in theory a triple top on that chart since the middle of last month. Downside obviously initially 6600 zone, which is post-July support. Onto the DAX, which is under a cloud given the pain at Deutsche Bank. That doesn't look like it's going to be sorted out anytime soon, but you can see here there's been effectively a trendline break and a triangle break as well after a triple top for this the German index since the middle of last month. View at this stage is at least while we're below the 50-day moving average at 10,474. The target here could be as low as 10,018 at the 200-day moving average. Onto the US markets, and there was a slight overnight boost as far as the futures were concerned with the better performance by Hillary Clinton versus Trump, but at the same time we do have the fader at the 50-day moving average there for the Dow, 18,421, and also a journey back towards the main 18,000 support zone. If that breaks, then it could be quite a quick journey down to the 200-day moving average at 17,591. On to the S&P, and here we see that we actually had a bull trap through the 50-day moving average. Interesting that there was a gap through it and then a gap below it. So basically we go with the two-day island top with the gap fill of the initial September sell there as well, the gap down. So that really is a double sell signal. It'd be really difficult for this market now to shake that off. Initial support here obviously 2120, but the expectation now where there's all this gap activity is that we will break 2120 and head towards the 200-day moving average of 2061 in a similar type of move to the one we saw on the Brexit decline. For the Nasdaq, this was the best of the bunch, the big three going into September. Maintained that until really this week with the two-day island top and bull trap island top there for the Nasdaq. Probably now initial support 47.67. That's the minimum on the downside. If we break that, then we're down towards looking towards the 200-day moving average at 44.80. So this market really could snap quite violently if we break down below the 50-day line again. On to the currencies, and although the punters are long up to the eyeballs of cable, it's not really behaving as if it is a buy at this stage. Looks like we've really got consolidation below the 10-day moving average at 130.50, and while we're below that, the target would be that July post-Brexit low at 127.98. Moving along to the euro, and here we see that we're still in this triangle between 111.50, which is the 200-day moving average, and an August resistance line at 113. Wait for a break either way, I suppose. At the moment, with the RSI at 54, just under 55, we would be looking for a break to the upside rather than the downside. Dollar yen still holding on to the 100+ yen tag. 138, so only just doing that, and I have to say the price action of recent days and the candles there not looking great. We had the big move to the downside, really retraced half of that, and struggling to hold the 100.10 level. We bounced off that today, but perhaps next time the market will then go down below 100 yen and stay there. Risk of 96 yen, which is the floor of this July trend channel. Finishing off with gold, and here we see that we've got it right on the 50-day moving average of 1332. While above that, aggressive traders could be looking for 1350, but really the big break here would be a break of 1350 and a July resistance line through that level to give us a new leg to the upside and possibly up to $1,400. That's it from me. More updates at the same time tomorrow.